With uncertainty's tight grip on investors, many are choosing to dump cash into blue chip stocks. And why wouldn't you? Well, we've found you an 8 out of 10 ranking stock that could help you navigate the chaos. Our proprietary Trackstar stock search database identified one beaten down blue chip that has gotten more searches over the last month than Philip Morris, Kraft Heinz, or Berkshire Hathaway. 3M could be a stock that investors pile into given its attractive dividend and low valuation, but the company has been subject to a sluggish economy and copious lawsuits. So we dug in to see whether 3M is a value play or merely held together by Scotch tape. 3M is an industrial group with a history of innovation. It sells over 60,000 products for businesses and consumers, and shares of 3M have been under pressure this year, mainly due to a weakness in the economy and pending lawsuits that it's dealing with. This year, more than 230,000 lawsuits were filed against the company. However, most are dismissed or settled out of court. 3M modestly grew its revenues over the last 6 years, from $30.1 billion in 2016 to $35.3 billion in 2021. And over the last 12 months, it hit $34.7 billion in sales. In Q3, it returned $1 billion to shareholders through dividends and gross share repurchases. It's paid dividends for over 100 years without interruption, and currently 3M boasts a dividend yield of 4.8%. The company has $3.59 billion in cash and $16.63 billion in total debt. Its 1.56x current ratio is another example of its strong financial footing. 3M trades at a PE gap ratio, which is a lot cheaper than its competitors, and its price to sales ratio is mixed amongst the same peer group. 3M boasts a net income margin of 18.9%, which is much higher than some of its rivals. But more importantly, 3M is a money-making machine. And after having had its best year ever revenue-wise in 2021, 3M experienced a slight decline in 2022. And 3M's EBITDA growth of minus 31% year over year is disappointing, especially when you look at other companies in its category. A weaker economy doesn't bode well for 3M, nor does the uncertainty of its pending lawsuits. But with the stock down 30% year to date, one could argue that the bad news is priced into the stock price. We believe the stock is a buy at these levels, despite all the uncertainty it faces in the near term.